Mike Campion, bon dia from Maastricht this morning. Good listening to Paul. A bit of a roller coaster in the markets presently. Interesting times. So, Mike, another fan of your contributions to the Good Morning Portugal show and our webinars, Paul. How has it been in the markets? What is going on? Why the roller coaster? Is it to do with Biden at the wheel?
No, well, I mean, Biden at the wheel is for different reasons, just as dangerous as Trump. Yeah. At least Trump was at the front of the car. Yeah, Biden is asleep, and he's a passenger sleeping at the back. So, what's worse? I don't know. This maniac driving the car, or the guy falling asleep at the back. So your guess is as good as mine. But look, the markets are volatile by nature. I think we're seeing great volatility because there's this uncertainty. Is the global economy petering out, and the data coming in tends to suggest that the economy might be slowing. We're getting high inflation, but there's the Chinese market has collapsed because it has I think the debt level, the credit level is 3.5 times the size of the economy. So we're seeing a huge collapse in the Chinese stock market. Will that have a contagion effect globally? Inflation or deflation? Will the US taper quantitative easing as they've suggested they would do at the last Fed meeting, or won't they, based on the data that is now coming through? Will they raise rates, which I don't think it will happen, because that would be, that would just lead to a market collapse. So there's so much uncertainty. The data is patchy at times. People are nervous. The US stock market in particular is grossly overvalued. So it's that uncertainty and volatility. And I don't think it's going to go away because, fundamentally, the economy has been kept going. It's like someone who's dead but is on life support and no one wants to switch it off. So long as they keep the quantitative easing, they keep things going, the economy can continue. But at some point, someone has to make the difficult decision of switching off the life machine, which is tapering and the quantitative easing, keeping rates at zero. So there's a lot of uncertainty, and the fact that the Chinese market has dropped 30% in value 2030, and some analysts are saying is that because they are leading indicator suggesting that the global economy will tank and stock markets will crash. So we are seeing that volatility, which is inevitable during periods of uncertainty. It's no great surprise to me, but investors think that it's a one-way street and it just goes in a straight line, but it doesn't. And one has to be patient and keep their wits about and keep their heads and not be not expect miracles in a market where there's volatility. You just have to keep your head together and keep calm.
Interesting. That is such a chilling analogy of the world sort of money body, lying there with various tubes coming in and out and being pumped full of money every now and then just to keep it alive. It's terrifying in a sense, isn't it? And obviously you have to be careful and plan for the long term in such a scenario. Although there's there's an irony there, isn't it? Planning for the long term of somebody on life support is a chilling analogy, Paul. And why is the data patchy? Why? You're talking about becoming digital. You're talking about the internet and how that's changed our lives. Why, in this age of flowing and instant information, is data patchy in the money markets? Why would it be like that?
No, patchy in the sense that it's it's not always consistent, right? So we're seeing a lot of inflation, but equally, we are seeing evidence in some countries that there could be that inflation is peaking, and one doesn't really know in what direction it's heading. And then they say they're going to taper, but if the economic data that comes in suggests that the economy is weaker than expected, then they have to revisit that decision. And the thing is that central banks haven't got the hand on the handle. The reality is that they've lost control because they're trying to manipulate the economy through unconventional means and methods, which means that no one really knows how we're going to get out of this one. But one thing is for sure, there's a lot of the global economies are awash with liquidity through tapering and quantitative easing, and we know that the central banks are between a rock and a hard place because they say they're not going to taper, they're going to reduce their tapering, reduce the amount of quantitative easing and liquidity they put into the market. They buy mortgage-backed securities and they buy US treasuries. Central banks in other countries buy their own securities, right? And by buying their own securities, they suppress the interest rates and they keep them at zero. And they're saying we're going to stop injecting liquidity into the market. That will push interest rates higher. And the reality is, if countries have a lot of debt, there's debt servicing costs. So they can't afford to do that. So they're saying that they're going to take an action which they know full well that they can't take. So they're trapped.
My
They're
goodness.
absolutely they're trapped.
Two analogies, metaphors at work this morning. The financial body on life support, but
Yeah.
also who's driving the bus. I mean, it sounds like Joe might be being chauffeured and might be asleep on the back seat. The money people are also towards the back of the bus, not wanting to take control of the wheel. Who's driving it, Paul?
God knows. I
Okay,
think
thank you
it's
for
God knows.
Okay, all right. It's that moment. It's that moment in our financial conversation where we look to the skies. And Paul Williams is here this morning
Okay.
as well. Ponte Alegria from a Misty Peña this morning, going for a bit of face-to-face retail therapy. And that's a good comment, Paul, because people still want that in this little neighbourhood that I'm in. Even though God forgive me, I went to Lidl last night. Another company that's killing it around the world and killing off small businesses. There are still small businesses around here. There are these cave-style mini markets, with the thinnest profile at the bottom of a building, and you go in and you've got everything you need in your locality of all the basics of groceries. And there's a man in there. I saw a bacon slicer, Paul. When was the last time you saw a bacon slicer? This man is slicing cold meat at the back of the shop. His mum and his wife and his daughter are working in the shop. This is the retail therapy that I like. This is supporting a local business. And I hope that they can weather the storm you're talking about. And they'll
But
see this high street phenomenon come and go. And they will remain a really important part of local communities like this. Go on. What were
I
you going to say?
no, I totally agree with what you're saying. But the pace of life is so fast that
Yeah.
you try and declutter and simplify your life. For example, for the first time ever last night, I ordered my groceries online
Yeah.
for home delivery, and I think you try and simplify your life. And I still shop at small ones, as you say, because that's part of the community. And I
Mm,
think you'd loathe to see them, go under. But
absolutely.
unless we go slower rather than faster, I think one has to find ways of making things easier,
Well,
and
it's
that's why
very
everyone
profound.
goes online.
It's very profound. So actually, maybe when it comes back to the bus, we need to park that bus up and reconsider where we're going. Don't keep
Absolutely,
driving. Stop the bus for a bit, everybody.
yeah, and
Think
and
about
reflect and reflect.
yes, yes. Good work this morning, Paul. Good work.
Thank
And
you.
Felicia's are the happy wanderers. That's fantastic. Thank you very much for that. Midlife. What do you think about hard assets like gold and silver? Thunder Duck has a great question for you there, Paul. What do you think
I
of hard assets?
well, I love that question because my view has not changed one bit. I think what we find is, again, it requires great patience because gold and silver can be, for an investor, it tires you because it's not going anywhere. It's moved in the wrong direction during the summer. But notwithstanding that, the gold and silver miners are so heavily undervalued and discounted, both from a technical perspective and from a fundamental perspective. They are heavily discounted. And it's a question of time before they start rallying again, and it's going to be a big up leg, I think, in terms of the next rally in gold and silver. So anyone with liquidity, they should buy not necessarily gold and silver, but the gold and silver miners, because it's one of the sectors that gives the best yields. And we just need to be very, very patient and keep buying at these levels because they are heavily discounted. And the big asset allocators like the pension funds and investors and traders, eventually they'll realize that which assets are overpriced and which are undervalued, and they will buy the cheap ones. And gold and silver are perfectly positioned to rally considerably because, as I said, they're very, very cheap. But if you're looking for I'll buy now and it goes up tomorrow, then don't buy. Be patient because it's a very volatile asset. It's a very volatile period, but they are heavily undervalued. Heavily
Okay.
undervalued.
Okay, and Mike's adding to this. Paul, what is your view on holding precious metals? I think that came in whilst we were talking there. Gold, palladium. I'm talking physically around 10% of portfolio. Would you have that as a
I
good percentage of your portfolio?
well, I'll tell you what we have. We have 25% in gold and silver miners, and we have 10% in industrial metals, including palladium, nickel, aluminium. Look at aluminium, how the prices have gone
Uh-huh.
through the roof, through the roof, and
Okay.
the price is going to continue going up because there's supply chain disruptions during COVID and the demand after the reopening of global economies. I think we will see a lot of those base industrial metals and the shift to the green economy. So that's a space to be in for the patient investor, not for
Okay.
the. It's gone down 10% because it will be volatile.
Yeah.
That's not the idea. Investing is not about I buy today and the market goes in my favor on day one and I just make the money on day 10 and I cash it in. Doesn't Life doesn't work like that. Patience is key here. But I would agree with Mike and some of the other subscribers. Gold, silver, industrial metals, definitely buy and hold and be patient. That would be my message this morning.
All right, so there you go, Thunder and Mike. Don't mention, I can't remember which C word I used the M word, Microsoft. But then there is the silver mist, and I'm not sure that's what that's in connection with there. You might be able to help me with that, Paul. But we have been chatting quite a lot, and the comments have been coming in thick and fast. Let's deal with a few of them. What is a good amount of investment savings to make a move? A retired couple thinking about life in Porto. Is that too general a question from Eric there, and too Portugal
Well,
specific, possibly,
well,
Paul?
my first question would be, what is the time horizon?
Okay.
What are the, you know, you would need to understand a bit more what the financial position is. Time horizon, we would need to risk assess to understand, the return expectations and their tolerance to risk, because
Hmm.
that goes all hand in hand. It has to be, if they're very risk averse, they shouldn't put anything in.
Yeah.
And what is their liquidity like? What is their expenditure pattern? What is their income that they're getting in? How much do they have for long-term investments? So I can't answer that question without having the full picture.
Okay. So, what's needed there, Eric, by the sound of it, is to talk to somebody like Paul and do a good audit. What are your
Yeah,
life expectations?
absolutely.
What are the short term and long term outlooks? What are you trying to achieve, basically? And what's behind the question there? But Eric, yeah, feel free to reach out to Paul or a similar financial wealth management company. Bon dia from Louise. Good morning to you, Louise. Thank you for your message this morning. Really appreciate that. I'm assuming, says Francis, because of such low interest rates in Portugal, there's no point in saving your money in the bank. What are some other options? I've never really explored investment. So this is a great question from Francis. Not everyone's that fussed about money, are they? But you can't live without it. And there comes a time where you're thinking, hold on a minute, if I put my money in the bank here, it's close to pointless. Would you recommend something other than a savings account in the current with the current interest rates as they are?
I think it's a brilliant question from Francis. I totally agree, but I think it's the same scenario as we've just described.
Right.
What is this situation? But yes, having a bank account paying 0.5% or 0.25% or whatever they pay, and inflation running riot as it is now, in real terms, it's devaluing the money. So,
Yeah.
but again, it depends on your tolerance to risk and your investment horizon. If you're looking 10 years, then 5 years, three, it depends. But there's
Yes.
there's areas you can invest now for the longer term and take advantage. Look, we said China has fallen, the stock market has collapsed. It might fall even further. Those corrections are great entry points for investors with a long-term mindset.
Yes.
That's what
Yeah.
I would say.
Okay. And you have had your eye on Chinese companies, haven't you? So that now might be
Yeah,
the another look at those.
yeah. I think NEO, we've talked about NEO and it's fallen 11%. But equally,
Yeah.
those shares we covered, there was three. Ternium, who's a steel producer, we bought them in July. We closed them yesterday for clients, 30% up in 2 months. There's Avast, which is, as you know, cybersecurity and
Hmm.
PC security and all that. And there's yeah, and there was a third one again gone up 30%. Yeah, Advanced Micro Devices (AMD), and they've gone up 30. We're closing it, bang, and then we wait. Neo has come down. Does that make it a bad investment? No. Patience
Hmm.
is key. It's maybe an
Patience.
opportunity. It's an opportunity to buy a bit more. Remember, you
Yeah.
average down as the market goes down. It's not to be, I'm taking all my money away. The market has
Yeah.
gone down. Yeah, it will. But
That's,
it's a brilliant opportunity to buy even more and
yeah.
position myself for the long term.
My two penneth on this, Francis. I want to see some social investing. I really do. I think if people could be lent money, who really need it, who can clearly pay it back, but don't fulfil the standard criteria. People who've rented successfully for years, and could have a chance at buying a property. They sometimes find themselves out the criteria of the standard lending establishments, because it's about trust, isn't it? And it's about reliability. And people don't when people don't know each other, they ask for a more stringent level of guarantee, don't they? Or they just won't take the risk. And I would love to see, whilst some people have got money sloshing about, as it were, that isn't going to earn anything in an investment account, a savings account, if that could be invested socially, with real people, such that their life chances could be improved, and we could find a way of doing that safely and reliably and in a trustworthy manner. There's money to be made in that, isn't there? There's
Absolutely.
social advantage to be gained, absolutely, but there's also money to be made. There is a little bit of usury possibly going on in that, but that's no bad thing if it's a win-win for everybody. So, but it's finding the systems for that, isn't it? And I think the blockchain is quite healthy in that way, as a way of establishing that sort of trust between people who you might not know. So I've got big hopes for the blockchain, and I'm looking forward to much more social investment where your money can really make a difference, and you're not necessarily having to invest in a big pharma company or Amazon or Microsoft to see a return, but you're doing something good with your money that affects everyday people, is what I would add to that. Sir, I took 2 doses of Covaxin in India. Is Covaxin allowing me to enter into Portugal or not? The question there is it's about more about the testing than the type of vaccine you're taking. That's a Ask Anything About Portugal question, India. I hope that's helpful. We've covered Mike's question, and Gary is welcoming Eric home to Portugal here, spiritual home. Look at this. Here's a message from a wife to a husband. Come home, we have son, and bring coffee, perhaps as well, and milk. My plan after moving to Portugal is to keep half of the money from Amsterdam apartment sale as savings. Should I keep it in a bank or invest? I guess you're going to refer, Matty, to that same answer as before, right? How risk
Absolutely.
averse are you? What's your long-term strategy?
Absolutely. But the money, remember that the key here is the money has to work for you,
Yeah, yeah. Make the
especially
money.
in an inflationary environment where, in real terms, inflation is eroding the value of money. Yeah.
Yep. Yep. Okay. Project Frugal Vinny here. Hi, Paul. Would 300,000 euros provide enough income from investments within Portugal to survive, assuming we purchased a home in Portugal, or would we likely need some more? There's 2 adults and 1 child there. Again, is it too difficult to not know what their circumstances and requirements are to make a call on that?
Well, it requires. I mean, what age are they? Are they 40 and they're planning to retire now on 300,000, or are they 70? Again, it's all about in what context and having the full information. So
Yeah.
300,000 seems a very small amount. People think, they have 1 million, and I think it's nowadays, money is, yeah, and what is their spending pattern? Do they
Yes.
spend 50,000 a year? Or they're very frugal and spend 20,000 a year? And it's
Yes.
all those nuances that determine whether 300,000 is enough or not. But I
Yeah.
would think that the fact that they mentioned one child, they're young enough, and 300,000, again, unless they have other sources of income and they plan to continue working,
Mm.
we need to understand what the circumstances are to be able to provide a proper response to that question.
All right, and I'm going to put your contact details on the screen now, Paul.
Please.
People who want to have a chat with you should go here. Go to
Thank you.
expatsportugal.com. Go to our business directory and look under wealth management, and then you can make an appointment with Paul. I'm laughing because Project Frugal are very frugal. He. So that's a great start. Fantastic, Paul. I say Fiona and Simon. Bon dia, Carl from Loy Long. We just missed each other, didn't we? If you have sold a house in the country and could take at least a year to buy it in Portugal, do you have to just suck up the depreciation of your money? Is there anything you can do for the short period? Now, this is a position people will find themselves in. This is being exposed to the low value of money, isn't it? You've had a good asset in your house. You've sold it because you've got an agreeable price. But then it hurts a little bit, doesn't it? Because you're not seeing the appreciation of your money in the form of the housing asset. And you're just seeing it dwindling and languishing in the bank. What can you
Yeah.
do? Suck it up, as you say here.
I would say one thing, people I think we all wired that way. We all want to own our property. But
Yeah.
sometimes from a, if we think about it rationally, you don't need to own your property because you can rent, and then you've got the free assets from a sale
Yes.
of another property you can use to drive income, right?
Yeah.
And you could buy a property, but do you buy the property for yourself, or do you buy it as an asset to produce income because you rent it out? And those are
Mm.
the things that people need to consider.
Yeah. And as
Be-
Robert Kiyosaki says, owning a house, if you live in it, is not an investment, is it? It's a liability.
it's a liability. You
Yeah.
you speak to any investment guru, they'll tell you that you'd be better off renting.
Yeah. Yeah. Very interesting. And renting in somewhere like Lisbon as well, and having a fantastic and interesting life. Question for Paul: what range of investment returns do you expect for USA and global stock markets over the next decade? Come on, Paul. There's a good one.
Well, I think we're entering a period of great uncertainty, but remember that one thing is the stock market generally, another thing is the sectors within the stock market. Some sectors do well in periods of uncertainty and periods of economic decline, and others do very poorly. So you
Mm.
can't just look at the overall market. Sometimes you have to look at which sectors perform well in the environment we're in,
Yeah.
which
Yeah.
is why gold and silver is one of them. But there's other sectors that potentially could do extremely well in the environment that we're in now. And
Yeah.
so yeah, don't look at the headline stock market, but try and find pockets of value and sectors that are going to perform well.
Thank you for that question. Thanks for getting in touch as well, Jeff. I will get back to you. We've been inundated with responses to the launch of our full-on Expats Portugal plan, hand-holding, cheerleading, and sometimes butt-kicking people who want to make the journey to Portugal. So I'll be back in touch with all of you who very kindly got in touch with me after the video I made next to the tram yesterday, the 28 tram in Lisbon. It was an iconic moment as I was making my video for you yesterday. Here's an interesting input from, I think this is from Fiona and Simon. It is looking for investment opportunities as I don't like a lot of cash around the house. I'd refer you to the earlier answers. Cash lying around the house ain't going to do much for you. Here's another alternative. The multicolored trainers are coming into stock this week in the UK at Lidl. Now, they can appreciate massively, but not if you wear them out. They've got to be box fresh and pristine to be resold on eBay, I think. Those sorts of investments are fascinating, aren't they, Paul? Collectibles. There's a lot of money to be made in that. But again, you have to be long term. Most people go into it thinking short term, don't they? And they get stung and they think, what's this all about? I can't make any money. But it's all roads seem to point to the long term, don't they, for any
Yeah,
serious?
the impact of the compounded effect. Everything you're doing in life, right? If you train once and then you don't go to the gym for the next 6 months and train again, it has no impact whatsoever. If you eat healthily for 2 days and then binge for another 30 and then try again, you don't benefit from the compounded effect, right? But if
Yeah.
you eat sensibly every day with your veg and your fruit, you go to the gym continuously, then 6 months from now, you see an immediate benefit. It's doing it consistently, religiously, keep going. And the same with investments. It is
Yeah,
that long-term mind frame about doing the right things continuously and looking at the benefit of the compounded effect, because that's
yeah.
what it is. With
Well,
every day that you do the right thing, it has a huge incremental, there's an incremental value. Yeah,
yeah, and or as Jeff would put it, keep calm and carry on. It's great advice, isn't it?
absolutely.
5 words there. That's basically what you're saying. Paul's saying one from one Paul to another. Can you pass me the happy tablets? I guess that would be a great investment. Happy tablets do seem to keep their value, don't they? Pharmaceutical companies seem to be doing quite well out of those. Keep my money in US dollars or switch to the euro? There's a great question from John Gibson. Moving to Portugal, hoping to buy a home in December. What do you think about the dollar?
I'm very surprised the dollar hasn't depreciated in value, but
Mm-hmm.
there's a reason for that, and the reason is that whilst the US is probably leading the way in terms of its debt mountain is growing very rapidly, and the quantitative easing and the pumping of liquidity into the system, which devalues money, yeah, because if you increase supply of something relative to demand, then the value goes down, yeah, whether it's a
Yeah,
good, a product, or money. But other countries are still doing their own quantitative easing, so they're all devaluing. They're all devaluing or diluting their monetary base. That's why we haven't seen that huge decline in the dollar yet. But I think it's coming because it's gone through the Senate, a 1 trillion infrastructure bill. It's going
mm-hmm.
through the House of Representatives on the 27th of September. And once that is approved, and I think it's now more of a formality, because on both sides of the house they've found some compromise. The next one to follow is a 3.5 trillion, another stimulus plan for 3.5 that goes through the Senate in the autumn. I mean, that level of borrowing, which is so they have to increase the debt ceiling. Remember, a lot of countries have debt ceilings, and
Yeah,
it requires approval from the lawmakers that they are happy to increase the debt ceiling. Once you pump another four and you take on debt for another 4.5 trillion, I think that could weaken the US dollar significantly. So if I was a betting man, I would say the dollar is overvalued and we should expect some kind of devaluation within the next 6 to 12 months.
yeah. Okay, John, if you haven't already got an account with Spartan, who are our FX foreign exchange partners, it might be worth having a chat with them, and so you're ready to make the switch as and when you want to. You can also find them as you can, Paul. And Fiduciary Wealth Management in the business directory. Find Spartan in there as well. So, last one for you. I'm sure you've got things to do over there in Gibraltar, Paul.
Yeah,
It's been very good of you to give us so much
thank you.
time this morning. In your opinion, is it better to seek weaker markets to invest in, like the French invest in Portugal? Should we invest in lower value demographics opposed to Lisbon, for example? Interesting. So, sort of making or exploiting a weaker market. Do you recommend such a move?
In terms of what, stock markets, property markets, or what is it exactly?
I think it's a general question, but I mean, if you stick to your area, there, do you go looking far and wide? And I mean, if you're looking, as you said before, for the undervalued, you might find that in an entirely different culture, mightn't you?
Well, you look for undervalued assets that are going to perform well in this environment, but equally, again, it depends on what you think. If you think we are entering stagflation and an inflationary period, then you want to buy real hard assets that are going to appreciate, and that's in addition to gold and silver, you have real estate and so on. So yeah, I my way of looking at these things is always looking for at the macroeconomic environment,
Yeah,
trying to read the macroeconomic environment and understand it the best way possible,
yeah,
and then finding those pockets of value. And there are pockets of value and buying cheap. I'm not a great believer in chasing trends because it happens in a nanosecond. You bought and sold, and there's day traders making money out of that, and it's not our space. So always keep the longer term in mind. That's always a very good advice, I think.
there you go. Slow and steady wins the race as ever. Paul
Absolutely.
Correa,
The tortoise. The
be
tortoise. The tortoise or the hare, and it's always a tortoise. Yeah.
he's got a hard shell. Um,
Absolutely.
Yes. Paul, thank you so much. Great to
It's a
have you
pleasure.
back. Great to talk to you. See you soon on the webinar,
Thank
the
you.
upcoming webinar, where I'm sure you will be dazzling us again with a few ideas. And we always like to talk to people who are getting into investment and want to know the basics. And you're very happy to share that sort of insight. So we'll see you then, my friend.
Thank you, Carl. God bless.